Duncan, it'll be great to hear some of the issues that your sovereign wealth fund, I mean, you have every single sovereign wealth fund on the planet as part of your constituency. So I'll be really interested to see what's happening on the one hand. Secondly, as Nick has pointed out, as John's pointed out, as Uche has highlighted, we are financial investors. There's only, we cannot solve every single issue as asset owners, but I do think we have a particular expertise in long-term investing, and reshaping and modeling the new economy is some intellectual capital that I think we can put on the table and help our policymakers and governments understand the value of that as they need to reconstitute and regulate and sort of drive this new normal economy from a base of stabilization ultimately to a thriving new normal economy. So over to you, Duncan.
Thank you very much, Hubert. Right, I'll pick up on your point about the leadership shortly. What I want to do is just start giving a very brief overview over what's been happening with sovereign wealth funds around the world. We had a conference call this morning where we heard from Australia, among others, that they've had the same issues as everybody, keeping their staff safe, making a transition to digital working, making sure that they have the right governance approaches. So I think everyone is going through that. From an investment perspective, we've got access to some data from one of the major custodians. It's about 15% of the world's tradable assets. And what that has said really over the last 6 weeks since the start of the real impact of the pandemic is unsurprising. And this is for long-term investors, so pension funds and sovereign wealth funds. We've seen outflows from commodity-sensitive currencies and commodity-sensitive equities. We've seen the selling of emerging market foreign exchange versus the US dollar. Unsurprisingly, we've seen the highest levels of cash since 2009. And we've seen less to equity. In fixed income, there has been some inflows. There has been some risk appetite in things like high yield in corporate bonds. So it's not all negative. And in the equities, the defensive stocks such as utilities and healthcare have both done well. The outflows have been from the likes of energy and transportation. So that's very quickly the sort of the global view on how long-term funds have responded. There is inevitably a decline in the risk appetite of those funds, really as you would expect. So as a subset of sovereign wealth funds, we see some have a stabilization role. We know about Nigeria, you mentioned, Hubert, and we had Uche on before, where they've had some an element of drawdown and withdrawal from that fund. We've seen that certainly in some of the older funds with greater pools of capital, where they're serving that stabilization purpose. We've also seen with those funds that are responsible for multiple state-owned assets, state-owned enterprises, how quickly they've been able to respond and redirect some of their manufacturing and the like into responding to the crisis. So that's been a very big positive as well. So, but let me just now then look to the future and a couple of points. Firstly, to take up something said and something in Buoy to a debt sovereign wealth funds. Their intention and the investment cycle. that is going to become increasingly stretched and under in weeks. Governments are looking around how to resolve that. And that's why, as Mbui said, the importance of the Santiago principles and those governance and good governance really come into effect. So perhaps the challenge, as you've laid out, Hubert, is to start to think of a longer term thinking and an intellectual approach, how we can try and navigate through those different and this, how can a very hugely important pools of expertise who can bring that to, who can offer government the language of the market and the language of investors, and they can play therefore a more role in being able to the future of how that longer term recovery may come about. And the way I central banks, which are a very strong reputation intellectually, but also of independence, and a strong reputation across the continent. There's almost a parallel or a model there for sovereign funds to start to think about establishing themselves in that as key participants shaping the debate of the long-term future and the recovery of the various economies across the continent. So let me leave it there with just a couple of thoughts that maybe spark a bit of discussion.
Doing business in Africa. You can't afford to be without Africa Investor.